Greetings traders out there in trader land. D7 here with Grok Trade Weekend Edition video. Good to Sunday, June 21st, 2020. Happy Father's Day if you're watching this on Sunday. And here's the deal. I'm going to start off with something a little more different, okay? New site called Quiver Quantitative. Go to QuiverQuantative and neat site of data. And here's the deal. A lot of data here. Things that I'm interested in is taking a look at Twitter company followers, the followers like Manu, for example, an uptick in followers. So I think that in Tesla and Win here and Spot, okay, so we have some upticks in Twitter followers that could be indicative of interest, of stock interest, and we could see some upward movement here, and vice versa on the sell side right here. KSS, is that Kohl's? Which one is that? Here Lulu, negative. DBX is very negative. So the other thing is Robinhood, most popular stocks. I'm interested in learning how once they hit this footprint here, this heat map, like Ford, for example, or CCL or Tesla, when they hit this, what happens to the stock after? If you are a data person and you want to help me research this to find out what works and what doesn't, very interested to team up with you. My email address is D as in Delta, E as in Echo, S as in Sierra at groktrade.com. If you are a data geek and you like information, want to team up with me, fantastic, do that. But here's the thing I want to share with everybody. They have some other alternative things you could look at here. I'm not going to take a lot of time to do it, but I'm going to go to U.S. Senate trading. This is very interesting. If you go here, both senators in the House of Representatives, the Congress as a whole, they need to report what they're buying and selling, okay? And you can go and find out what they're doing. But down here on the U.S. Senator Trading Sentiment versus the S&P 500, the S&P 500 is the blue line going up. But here's the buying and the selling taking place, okay? So what you'll notice here, and I want you to understand what we're seeing, anything in the white is what's happening with you, the senators. If they're buying, you'll see ticks above. So this is what's called a histogram in the trading world. So the histogram, any tick higher is buying. The higher the tick, the more aggressive the buying is, okay? So you'll see we had buying here, we go up, buying here, we go up. A lot of buying here, we continue to go higher, higher, higher. But here is what's interesting. Right here we get some sells and a lot of selling taking place as we go higher here. But look how we're going higher, and this is the divergence I want to share with you. We go higher, higher, higher here, and look at the lower, lower, lower here. More and more sellers came into the market right here, even though the market was going higher. Senators were selling back as early as December, the end of the year, and then we go in here to the January 2020. And then we get over here into February 2020. Look at they continue to sell, and they sell more and more and more right before the massive drop. At the very bottom, right here, as we started to pick up right here, you saw major buying taking place with the senators. They were purchasing. And then look what happened, up, 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 up. Here's the point I want to share with you. Maybe you're looking at this already. We are seeing a sales volume with senators that is unlike what we have seen on this map. Do you see this? This goes back to what does this go back to? This goes back to January 2017, so 3 years. We have volume sales almost triple what we've seen. Now, this was a big volume sell here, huge volume. So we double that huge volume. So we're going higher, higher, higher. Senators massively selling. All right. So there is, and then you can go down here. This is a fascinating site. Really like it. Anybody from Quiver Quantitative, if you guys want to team up with Grok Trade, I'm interested in talking with you guys. You guys seem to be fairly new. Okay, let's get into the markets, but I'm going to show you something. I'm going to stay on the geek side, okay? And this is where I'm going to start geeking out. For you guys that don't know, I'm getting into quantitative trading. Quantitative trading. Quantitative trading. Quant trading. Not the big, because every day trading against the big boys out there in the markets. They have these big elaborate trading machines. They are powerful algorithms out there trading, and I have learned to trade along with them because there are patterns. You can see them in the charts. Okay, I have developed my own, and it was not easy to do. I have my own quant. You're looking at it. This is TradingView. I have a link down below for TradingView, but this is the quant that I'm using. And it is huge, guys. This is a ETF. It's been around for 7.5 years. It is a leveraged ETF. This dude has profited 2,066%. Wow! Check this. This is the results of my trading bot. Okay, my trading bot. If you go over here, I have a win ratio for all you 301 and 401 mentor students. The win ratio is 81%. 81%. So in other words, every 10 trades, 8 out of 10 are winning. That is unbelievable. Listen, so your chances to have 2 losing trades in a row are not likely. Your chances to having 3 to 4 winning trades in a row are highly likely. And this is unbelievable. My profit factor, which is basically a reward to risk ratio, is a 3.5 to 1. 3.5 to 1. So let me put it this way. Every dollar you put on the table, you're making 3.5. So every dollar of risk, you're making 3.5. Are you kidding me? This is unbelievable. You crunch the numbers on this. So in the last 7.5 years, the biggest drawdown was 22.41%. We just had that recently with the big drop. I mean, I'll show it to you. You can see this here. See the drop? So this is the profit. The profit line just keeps going higher, 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 higher. This is the equity line, if you will. The equity or the profit keeps going higher, higher, higher. And we had this drop, roughly 22% because of the big significant market drop in the markets. So 22%. Out of that, you hardly have any market drops. You got this little bitty guy there, but there's the big one. That's the red here. The red is the drawdown, okay? So I could not be more geeking out over this. The average trade is 33.32%. And so this is unbelievable. So the back testing that we're seeing here is just crazy, but it's long term. These are weekly charts. I'm looking long term. This is for big slow money. We're not over trading. These are trades. The average trade is one trade every three months or so. But this is a money maker, guys, and I could not be geeking out over this any more than I am. I just want to share this with you guys, just for no other reason to say, if you guys are in the development world, quant, and you like this sort of stuff, feel free to reach out to me. Team up with me. If you want to be part of this in any way, shape, or form, Des at groktrade.com, D-E-S, Delta, Echo, Sierra at groktrade.com. So feel free to do that. Now, for those who are still with me, let's get to the stocks, okay? This is what you're really here for if you're following me. I hope you're okay with me sharing what I just did with you. I hope that was of benefit to you, that you'll find beneficial. If so, give me a thumbs up, like it, subscribe if you haven't done so yet. Okay, but here's the deal. We end the markets, big time bearish territory, gold and silver higher. Okay. And Bitcoin is sitting at 9,200 and VIX is at 35. Not too bad. But here's the deal. This is the S&P 500 that I'm looking at here. The S&P 500 is just chopping sideways, but we need to stay above the moving averages. That's really important to me to stay above these. But we're chopping sideways. Look for more sideways motion. More sideways motion is what's expected. The diamond, same thing. Look for more sideways consolidation caught up in the moving averages. Nothing exciting, guys. The Qs are up, but here's the problem. We are support. We broke the support. Now it's acting as resistance, and we're at this high. So that's problematic. Could we start dropping here? Yeah, absolutely we could. But I think the best bet is we're just going to start chopping sideways here for a bit. What you have is the Russell 2000. We're at major support. Look for a bounce to take place there. The financials down is kind of beat down a little bit, but we're in this big triangle, but it's caught up in the moving averages. Just look for chop going into this next week. US dollar is chewing its way higher, but this is called a bear pullback. That's no good for the dollar. Look for that to drop lower. Silver is building this big sideways flag. Look for silver to go higher. Gold is trying to track higher. It's trying to go higher. It's looking pretty good. VIX, this is a nasty looking chart, guys, because the VIX popped higher. Here's the bull pullback. And this is a perfect bullish engulfing pattern ready to go higher. I mean, VIX is a buy big time. In other words, I'm saying that fear is a buy big time. If I was just only looking at this chart, I would be bearish in the markets, okay? If I was just looking at this chart. This chart is very, very bearish. I do not like it. This looks like it's ready to rally northbound. However, this is a byproduct of what's happening in the future, or I'm sorry, the options markets on the put interest, okay? So anything can happen here. I don't usually go into the deep technicals on VIX, but that is what we're seeing. This is problematic for bulls because that could be problem city. Quick look here at Bitcoin. We're just going sideways below the moving averages. That's more bearish and is bullish. That is no good. Okay, quick look here at some stocks of interest on the tech side, guys. Now listen, educational purposes only. Education, these are not buy or sells. Apple is looking very good, as long as it stays on this trajectory, melting upward and above this trend line, all is well. If it goes below this trend line, that's no good. The rising 20-day moving average, it goes below that, that is really not good. So always remember that. AMD is sideways, stay away from it. Amazon's going higher, take profits. Doji'd out, it might be pulling down, but overall, that's still bullish. Baba, big sell-off on Friday, big engulfing. Look on volume, look for that to drop. Baidu, it's fine. Let it chop around a little bit and look for more upside opportunity. Booking is down, but chances are, let me see, it's caught up in a triangle, guys. It's caught up in the moving averages. Sideways, stay away from it. Sideways on Cisco, stay away from it. Catfish, sideways, stay away from it. I know you guys laugh when I call it catfish, but this is, and it closed below these moving averages, not good. eBay is looking good. Facebook is looking good. Google's starting to roll over. I'm not liking that so well. GoPro is look for sideways motion. Microsoft, it looks like it's topping out, getting ready to drop. MU, sideways, look for more sideways action. Netflix is looking really good, but it's coming up to a resistance area. If you're with it, stay with it. As long as it stays above these quick EMAs, you'll be fine. NVIDIA is right on this trend line, guys. It needs to stay above this trend line. If not, stay away from it. You'll see it to start to break down. It looks like it's starting to top out, guys. Oracle is just a mess. Oracle is it's just a chopping sideways. Look for that to continue. Look for PayPal, take profits there. It looks like it's going to come, and then look for another buy opportunity on a pullback. Roku, same thing, topping out, a little pullback, but you're sideways. Look, everything is sideways. Shop is going higher. Shop was actually on the list that we were looking at. Shopify on Quantitative or QuiverQuant.com. I'm very interested to know if these things, when they hit on the heat map, what the price action does soon after. I'm interested. If you're a data guy, I don't like to quantify or grab all the numbers. I'm not that type of guy. I like to analyze them. Okay, that's me. So we might have a good tag team if you guys can be the ones to look for that and talk to me about it. And it could be a commensal relationship there. So let's look here. Snap is higher. Look at Snap's just doing really, really well, isn't it? Tesla is still doing well, but it's slowing down quite a bit. Twitter is pulling back a little bit, but it's in the moving average. Needs to stay above a trend line. If it can do that, you should be fine with those guys. Okay. Woo! That was lightning fast. Monologue time. I kind of did that at the beginning. So guys, I am, and if you're just wanting to hear trading stuff, that's gone. You guys can leave. And you're dismissed. For the rest of you crazies who like to listen in at the end, which you're just crazy. I've been losing sleep. I've been just geeking out on this algorithm stuff. Because why? Here's why. Trading, when you trade and you're doing it well, and you professional traders who are listening, you confirm this in the comments. Trading is boring. It becomes boring. Have you ever worked in a factory before? If so, and you're on the line, it gets boring. Why does it get boring? It's because the monotony of trading. Because when certain setups happen, you do certain things. You set your orders, certain orders. Once those orders trigger, you put on certain stop losses. And once you put on certain stop losses, you manage your stop losses a certain way, right? Everything is highly anticipated, highly packaged. So we're not surprised as traders. So when we're trading, it's the grind of paying the bills. It's the grind of just doing the same thing over and over. Because creativity in trading can be an Achilles heel that hinders you permanently as a trader. And I struggle with that because I'm a very creative person. I like to create businesses. I like to create algorithms. I like to create new things that keep me alive and vibrant, and things that fulfill me as me as a person. So this has been fun. But I learned as a businessman to not get caught up learning the minutia, the getting into the weeds of learning. You have to lean on other people. So I have Ryan, who's my predominant guy who helps me with the heavy lifting, the shouldering my Python and Pine algorithm coding stuff. So I refuse to go learn Pine. I refuse to go learn Python, not because I'm opposed to it. I'm only pragmatically opposed to it because I know that would bog me down from progress. So what would help me is teaming up with developers who are equally as interested in this as me. And so I've got 22 years in trading. I have that experience to team up with somebody that has an equal amount of development experience, and that makes for a very powerful that's a combination that isn't easily broken. Okay, so there's power in those forces coming together, and I found that out. So the algorithm that I have is we stumbled on it because I almost quit the algorithm thing because it was much harder than what you think. If you have an algorithm that becomes profitable, you've done something amazing. And what's interesting is one thing that I know just intrinsically is that indicators are not good. Indicators and oscillators are like training wheels for professional traders. Professional traders don't need training wheels. So the more professional you get, the more you strip away indicators and oscillators, and you focus on raw data. Raw data is price action and volume. So that's important to us as traders. Raw data, not interested in some amalgamation. Man, I can't even talk. What a big day. You know what I'm trying to say, I think. But we're not interested in a formula that you put price action and volume into, and the formula kicks out some reading, some indication of something we should have been seeing already in the markets, right? So it's because it's taking historical information to come up with something, it's by default lagging. It's already the market's already doing something that it's not keeping up with. So that's my short version of why I'm against indicators and oscillators as a whole. People lean on them and you think, but I said all that to say this. We were going in and developing. I had some developers from other countries that were helping me out in France that are big time traders, big time developers. And I was having them just code certain indicators by themselves. If you just traded the stochastic, if you just traded the MACD, if you just traded the, whatever, indicator oscillator, would we have made money? And the answer is no. Every time. There's no one indicator by itself that would make you money if you put it into a formula and then you back test it for a gazillion years. You do that and you will lose money compared to buy and hold. So number one, your algorithm, if it doesn't at least make money, throw it away. But number two is, does it do better than just buying and hold? Because if you buy and hold, you're going to beat out 75% of all professional investors, financial advisors. 75% of them. The vast majority of them you will beat just by doing a buy and hold. If you're into the right ETFs, index ETFs, right? So here's the issue. The issue is, no, there's no issue. I could sit and go on to all these bunny trails. I just don't want to do that right now. So I know that you have to, one, make money, number two, beat buy and hold. You've got to do that in your algorithm. It is not easy. This is why hedge funds, institutions put hundreds of thousands of dollars. They pour into Ivy League people, graduates coming out of math, statistics, coming out of data. And they're gobbling these guys up and creating these highly finely tuned algorithms, machines, and we are trading against them in the market. So for me, it'll be a breath of fresh air to have my super duper uber cool, highly efficient, highly profitable algorithm, having that trade my account. We're live right now. I'm trading it live. I got my mom and her account is trading it live. We like what we're seeing. So anyway, yeah. So if you guys are interested in getting into this world anyway, I'm connecting with people. I'm just opening it up, letting you guys know that. So that's it. Hope you guys are well. Romulus will be coming on Tuesday. He'll have a video, so look forward to that. And if we have a mentorship coming up, feel free to jump in. It's 3 days, Saturday, Sunday, and a Monday next month. And if you want to join us for that, just go to the Mentor tab and learn all about it there. Take care. We'll catch you guys later. Bye.